What's up, everybody? Welcome back to RoyalBluFX. In today's video, we're going to talk about how you're backtesting wrong and how we can show you how to do it right. Okay. Now, I know a lot of you guys don't want to hear that because it sounds very negative, obviously, but once you see this video, it'll change your mind and it'll blow your mind, and then you're going to be starting to trade and look and backtest the markets correctly. All in this video, guys, so stay tuned. If you're new to this channel, welcome. And if you haven't already, go ahead and subscribe to this channel right now, guys, because we always give out free content. And just a little news update, we're very close to finishing the whole course for all of you guys, because I know you guys have been patiently waiting for that and have been asking for that. So I'm going to be releasing it very soon, roughly about a week from now. So without wasting any time, let's begin with this video. All right, so here we are on my charts, and I quickly want to say how, first I want to address that a lot of people backtest wrong. What they start doing really is, they start going on the 4-hour, maybe even the 30-minute, and start doing this. And this is not anyone's fault because no one really obviously appropriately showed you how to backtest, right? So what a lot of people start doing, this is, I was at fault of this too, honestly, but they just start clicking this, right? The forward replay button. They're just doing this, right? And they're just guessing where price, based off of your theory, the way your trading strategy is, right? A lot of people, do this. They do that, right? Break and retest. They go right there. Maybe they say they're buying, right? Whatever it is, right? And you constantly are at repetition, just doing this, right? You're just looking, what you're trying to do here is trying to read the market, right? You're testing out everything, right? I mean, every little detail, even demand zones, right? Maybe even trend lines. I don't know where the trend line would be, maybe like right here, I guess. I don't know, right? And you're looking to buy here off of trend lines, right? Stuff like that, right? So there's so many ways people are doing this stuff, and they're doing it wrong, and they're doing it blindly because there's no. You have to think about this. There's no coherent way to actually think about what you're actually doing. Now, this may help it to some extent, but it doesn't help you in the long run because I'll tell you this, it starts to trap you, and you start to become, an unfulfilled trader, someone who's blindly following structure and or the markets and buying and selling wherever they please to, right? Wherever it pleases you, because you think you see a setup in your own favor, but in fact, it could be manipulation. A lot of people aren't aware of the manipulation. They're afraid to take certain trades or certain entries because you don't know where the manipulation may happen, right? And and you've been becoming a lot discouraged, right? When you're taking, let's say, a buy here on this demand, this break and retest, right? And it takes you out, right? A lot of people become discouraged and then like, well, what's going on? Why did this happen, right? I'll tell you guys this. The cliffhanger here is, you are trading the wrong direction. You don't understand what direction is in the markets, and that's what it is. You don't understand where the direction is. First of all, we need to identify the direction. We need to simplify it very simply and clear, which we'll show you in this video, right? I'm just trying to show you everything in terms of why and how you're essentially backtesting wrong. So let me just continue with this, right? So here we go, right? All you're doing is click, 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 right? And you're just waiting for whatever setup, right? I think I'm being very clear about what I'm saying here, right? You're waiting for whatever setup to come and buy from, right? We're unaware sometimes which sessions we trade, right? And this is a very good point here that I'm about to make, but essentially you're unaware of what sessions you're trading. You're unaware of what the session is trying to do. And a lot of times sessions are very important because we understand that both London and New York sessions are the most lucrative and the most impulsive sessions, right? Not Asia and or the Australian session. So just to get the cat out of the bag, right? We take away the Australian session and the Australian and the Asia session out, right? We don't want to mess with those. We want to just focus on London and New York. Now, this may be all too, clear and vivid for you guys. You guys are probably thinking, oh, well, yeah, we know that. What's new? I mean, come on, I'll tell you why this is very important and how to backtest it. You should not be backtesting the whole, bare naked chart because you don't know what the market's doing, right? There's always a setup at every single day at the session open. There's always a setup. There's something going to happen all the time. And that something is sweeping liquidity, right? Not just any liquidity. Sometimes there's some certain type of liquidity like swing lows, right? Inducements, they're swept all the time. You got your relative lows that are always swept, right? You got your swing lows swept, right? You got your trend lines, the trend lines eventually will be swept, something like that, right? So all this kind of stuff, there's always something happening, right? But we want to be able to time the open, okay, the session. We want to time the session with the open of the market. Okay, when the market opens, what is price trying to do? What is its objective, right? And I think a lot of times, the reason why I'm saying this and why I'm giving this whole crappy intro about why you're trading wrong or why you're backtesting wrong is because a lot of you guys do this. You guys just click, right? And then you're just, okay, well, there I got a reaction, here I got another reaction, whatever. You're just following, and most of the time you're just following what current price action is doing, right? A lot of you are not aware of where price action was or where price was long ago before all this is creating or created, okay? So you guys are unaware of that, and that's where it traps you. That's where when you're not aware, right? You're blindly following the market. You're blindly following the market, meaning the market wants you to see what it wants you to see, right? But that's sort of oxymoronic, because if you're blindly following the market, you're essentially being misled. You're being misled, and that's what the market's trying to do. So that's psychological, right? So it's like kind of quickly here as an example, right? Let's just say, for example, you're at a magic show and you have a magician, right? A magician is going to come here with his hand and show you this hand right here and saying, hey, focus on this little, trick right here that I have. Focus on this ball, let's just say, right? That's a ball. Let's just, even for the sake of this video, I'll just turn it to red so you guys can distinctify this as a ball. Okay, boom. So let's just say that, right? And then this hand, he's doing this, right? But the other hand, okay, this is supposed to be a hand. Let me just do it again. On the other hand, he is doing the trick, right? So this may be a little too obvious for you guys. I don't know, right? But just bear with me here and I'll explain this, why this is so important. Okay, so in this hand, he's showing you the ball, right? So he's waving this hand around and he's like, hey, pay attention to this. Don't lose sight of this ball because it's gonna disappear, right? So what your main objective is, you're looking. Everyone's looking, right? I go against the grain. I don't look at that hand. I don't care about that hand. I care about what the other hand's gonna do. Okay, and this is what every trader should be doing, is to look at the other hand. Okay, this looks like a chicken hand, by the way. Forgive me for my crappy drawing, but I was not in art school. Anyway, so you're supposed to be looking at this hand, and this hand is where the real magic's happening, right? Where the trick is actually happening. And then this hand, right? This hand then tricks everybody here. And then everyone here is like, whoa, what did you do with that ball? Where did the ball go? This is crazy, right? This is nuts. Now, I know you guys don't like my analogies, right? It's a lot of talking, boring stuff. I'm just going to get right to it because I think you guys understand, for the most part, what my point of view is right here, what my objective is, and why I'm going to show you how to backtest correctly, because you don't want to be backtesting wrong, right? So forget all this nonsense about, click, and or playing the market like this, right, and waiting for it to do something, right? You're going to do it this way this time, okay? And this will be very effective. It's going to add a lot of credibility to your trading and a lot of knowing, know-how, right, in how you're going to do your setups now. So the proper way to do this is, once you have your proper setup, whatever that setup may be, right? It could be supply and demand, right? It could be your trend lines. I'm not telling you how to trade. I'm just trying to tell you, I'm trying to show you how to backtest correctly. All right. So if you guys don't have these sessions, go ahead and have this right here. It's called sessions right here, right? I don't use any of these. I used to. I don't know why I have them there, but anyway. Sessions. Go ahead and click that sessions, right? If you don't know what that is, where that is, and how to find it, it's by these guys here. Sessions. It's by these guys, RROX_. AIF, okay, 8,400 downloads on this one. So go ahead and download this one, all right? And for the settings is, I'm going to toggle this on right now, right there. The settings is when you double click this, right? Normally it comes like this, right? It comes like this, right? It'll have all this like this, right? You just want to activate highs and lows just to get a clear distinction, you know, of what the market is, and so you don't have all the jargon, you know, all the noise around. Okay, once you do that, obviously you want to properly set the hours, right? If they're not already preset, right? So I trade New York and London sometimes, but New York primarily. And New York starts at 9:30, not 8 o'clock, I think is where the session was already set up at. Okay, let's continue here. So here's what we're going to do. All right, your main objective is when price gets to your supply or demand zones or your liquidity lines, right? Your main objective is to trade this during the session open, right? Or wherever the session is, right? If you're doing trend lines, let's just say this, for example, here's a trend line. Let me even just put that as a trend line, okay? And I'm not teaching you all this stuff. I'm not saying do trend lines, do supply and demand, do all this other stuff. No, I'm just showing you whatever your objective is and how you trade, make sure to time the session with your strategy, okay? Here we go. So we can also say that this is this is the liquidity sweep right here, right? So there's liquidity traders, there are trend line traders, there's supply traders. There's also demand traders, which is right here, right? Whatever your setup is, make sure you're aware of this. Okay, so I want you to be aware and know that, look at the 30-minute, right? You can be in between the 50-minute and the 30-minute. You can see how impulsive these things run, right? They run, but they're all doing it for a reason, right? Why is price reacting the way it is? Well, that's because you guys are not utilizing the daily time frame or even the weekly time frame, right? I encourage you guys to do this because it's so important to see what's ahead before anything happens. That's how you anticipate into knowing what price is trying to do, what it's working on trying to do, right? All right, so let's go here. We can see that this was swept right there, right? So you can see, there's liquidity right there, right? Every high and every low has liquidity, right? So we're going to go here, right? And you can see that the daily, okay, so what are you trying to distinctify here? Well, you can see however you trade depends on where the session is going to open, right? So there's break and retest right here. Let me just do this right there. I have this BNR. I don't do break and retest, but this is a tool that I use, a line that I use for certain purposes. Once price runs the highs, right? For me, it runs the highs, right? I'm looking for potential sells coming down. So now I know that the daily, right? The daily looks like it's coming bearish, right? In my case, this would be a bearish move, right? Okay, so once we get here, you can see once we get to the 4 hour, right? So you want to get an idea of what the daily's trying to do, whether it's running bullish or bearish, whether it's broken a high or taking liquidity. Here's your break and retest. Hold on a second. Break and retest line, right? You can have it any way set up, right? And what you do is once you have all your setups ready, you go on the 4 hour, right, to confirm any other structure, right, to see where is price in this case, right? So once we have this set up, let's even go back. Let's go even back here, right? Let's just do this. Okay, so for a good measure, what you're trying to do is time the session with your setup. So you could also do this. There is liquidity here, right? Something like that. Now we're going to play it. Okay, price takes out some liquidity, right? And once it does, this is what liquidity traders would expect. They could go down on the 50-minute to the 3-minute. Let me see, can I go on the lower time frames? No, I guess it's the 30-minute. 30 minutes is the only lower time frame I can go. I went way too far back, right? But here we go. London Open, right? So what does it do? What do we expect as liquidity traders? We trade away from liquidity, right? So if you're trading liquidity and London just opened, you need to time the session with your setup, right? Which is your trading strategy essentially, right? So if that's the case, right, if liquidity swept, I'm trading away for that day. I'm looking to buy. So therefore, you would have bought this, or you've been looking for buys on the 1 minute. You would look for your confirmation on the lower time frame, and you would trade away, right? That's what you would do. So you're trying to find the impulse of that day, to trade the session of that day. So let's continue. So right now, we see that after London, there's New York, right? So I don't know how you would trade this area, right? I'm just saying, depending on your session, depending on your setup, right? Maybe here's some supply, right? I'm probably doing this all wrong, but this is a type of supply, right? New York opened. Now we have to anticipate what is, if I'm a supply trader, do I look for supply to trade from supply, right? Now, just because price didn't get there doesn't mean you should be, discomforted and sad and pissed off, right? It just didn't come there where you want to, right? Here's your demand, right? So, but I'll tell you this though, you generally want when price opens, you want to catch the origin of the move, right? Where the beginning of the move is happening. More times than not, where the beginning of the move is happening. So when London opened, it opened here, right? But the majority of the move was pushing bullish, right? I mean, it pushed bearish, but also pushed bullish. Broke out this high or whatever, So you're still trading the majority of the move, right? In this case, this is a demand zone, so demand traders would be here. If the market, if New York didn't come here within the first 30 minutes, or whatever, then don't be discouraged, right? I mean, normally it should. You want New York to come here right away. And unfortunately, this isn't the way I trade. I'm just showing you that you need to time your sessions with your strategy, right? So if I'm a demand trader, right, what do you think I'm supposedly doing here? I'm looking to buy here. So this would have been 30 minutes, right? So that's 1 hour, 2 hours, 3 hours, and then now 4. And then the rest of the move is happening. So here's the rest of the move, right? The rest of the move is happening. Now, when price gets to this supply zone, what's happening? Should I be selling from there now? No, because Asia session is coming, right? We just see the Australian session, then Asia session is coming right now. So I'm not trading into this. I mean, unless you want to be trading Asia session, it's up to you, right? Look at that, boom. How did I know, right? I didn't know, honestly, because I'm not trading supply and demand. I don't trade supply and demand. So boom. You could have followed that, right? So Asia's going, right? Trend line is here. Let's put another demand zone here. I don't know. I guess this could still be your supply zone right there because of a bunch of liquidity. So you can be a liquidity and supply and demand trading right here, right? But you want to time the session as soon as London opens, or roughly right around when it opens. Okay, this is 22. Let's see what happens. Okay, Asia ran down. Okay, so London's here, right? So you could either say I'm a liquidity trader too, because there's a bunch of liquidity there. So so people that trade liquidity, right, because supply is kind of fading out here, right? You could be looking to trade the supply there. So those supply traders that try to sell there got swept out, those supply zone, right? But liquidity traders would have had this probably, right? Yeah, like that, right? And then vice versa. If you're trying to buy off a demand, you might have lost. I mean, you would have lost because you bought here, price taken out this low, right? And then you got swept, right? So, but again, timing is everything, right? So for liquidity traders, this would have been good timing, right? Because we see liquidity there and London is opening. So we know based on liquidity and based on the London session, it peaked above and it traded away, right? So that would have been good for liquidity. That's the session. That's session timing, right? That's timing with your strategy, where your setup and your strategy with a session. You want to be knowing that specific reason, right? Of what to do and how to do this, right? Of when to enter. Okay, so perhaps more liquidity traders are here, right? More liquidity is there, but then there's also demand as well, right? So all of you guys can be eating, right, trading this, right? So this is becoming towards the end of the session. Oh, okay, there we go. The main impulse happened, right? So there we go. So it's in and around that area. Okay, so now I believe this is becoming, okay, 5, so 6:30 is when New York is opening. So if you're a supply trader, right, and New York's coming, right, look what happened. Boom. New York opened here and sold off, right, based on supply, right? So this is based off supply traders, right? So you'd wait for the session to get there and then you react to it, right? I'm not saying I'm a supplier demand or, trend line and all these other kind of strategies traders, none of that stuff. I'm just saying, and realistically, it's kind of funny to me. It's all happening as I'm showing you. I haven't backtested this at all, so I don't know what's happening. All right, so here is trend line, right? Here's the trend line swept. All this is liquidity, right? But normally we want to take the origin of the move, right? So this would have been your entry, right? Maybe you're holding it down to the liquidity, and this is where you would end. Okay, so let's look at the next session. Forget about the end of the New York, right? Now we have Asia coming in. If you're an Asia trader, right, this is a demand. Right, this is a demand zone with some liquidity, with some inducement. So Asia would have taken you up higher, right? Let's go and connect the dots now with, say, supply right here, right? So now supply traders are waiting, but we need to time this with the session, right? So okay, there we go. So what's happening here is a lot of supply traders must have sold there, but they got swept out, right? So that's inducement right there. So inducement traders would have been able to partake in this move right here, just like that, right? Now again, what am I saying again? This is the correct way to backtest, okay? Because you want to time, again, your session, the session impulse of the day with your trading strategy. Just, let's just say, when London opens, a lot of people are trying to buy here. And who knows, price could just fall and then come back, right? You want to let price come to you, to your setup, and then you react, right? So, right, let's do another example, right? So right here, it's funny, I was actually seeing this. This would have been an entry for me because I see this as a clean opportunity. So I would have looked at this, boom, right, as an entry. And I would have waited for New York. I wouldn't even wait for New York. I would wait, because I trade New York, and sometimes I trade London, I trade New York. So sure enough, if I had the setup already, pre-setup, another setup already made on the higher time frame, daily to 4 hour, I would already expect for this to fall because now I'm betting on the direction. I'm betting on the direction that it's going to sweep this high and run bearish, right? So first TP is right here at the demand zone because we know there are demand traders here, right? I don't know how you would draw this demand zone, but something or other like this, right? From this sell to this buy, right? So there's going to be some reaction reaction traders. Let's see, right? So there you go. You got some reactions, right? So whoever is a supply trader, right? You could be looking to buy here. However, okay, this is Asia. So we're skipping Asia. We want to go straight to London. Now what is London doing? Do we trade London, right? If you're a supply trader, are you going to be saying to yourself, okay, I anticipate that London's going to come from here and come to my supply, so now I must start buying just to get here, right? It could work, right? But we don't want to trade where price is currently, right? We want to wait for it to come to our setup, right? So right there, so if you started buying, you would have failed. Price never came up to your supply, right? That's why you wait. Here's your demand zone, right? So if New York opened, you would buy at this demand to go right at wherever, right? Wherever your TP is. Right? Here's Asia again. Let's wait for London. London just opened. It is right at your supply zone. Okay, so you would have probably sold that, right? Or looked for some setup to trade that away, right? Just like that. So you would have been selling that, right? Just like that. Same thing with New York. New York is here at a demand zone, right here. So in New York, you'd be buying this, right? Because it's a demand zone, right? So that's how you do it, guys. I hope you guys learned what I'm trying to talk about in this video. I hope that you guys learned that you need to time your session with the correct strategy that you're trading, whether it's supply and demand, trend lines, liquidity, all that good stuff. Make sure you time your session with your strategy. That means you got to utilize the higher time frame, daily and the 4 hour. Then you're going to start to understand that the strategy is in your favor based off of the setup that you had, right? The session will be in your favor based on your strategy, whatever that is, right? So I hope you guys learned a lot in this video. If you like this video, go ahead and throw a thumbs up right now and comment and let us know what you think. Until then, guys, we will see you in the next video.